Hello, traders. Welcome to AlBashir FX and welcome to our daily forex forecast. And today episode we have a really interesting forecast and what price is doing and how we can engage with price, and everybody sees how price, if you're a trader and you are consistent with the daily market, right? You see how price is moving recently, and I talked about this on our weekly forex forecast. Now the market is being bullish and it's not providing an opportunity for buyers to come in, or for retailers that use strategies, except you just want to dive in and FOMO. If you really want to expect price to reach your level before you engage, then the price never or really did not present solid entry for traders to participate in. Although there are a lot of allied traders who I don't know might have a strategy or an entry mechanisms that allow them to participate. But yeah, and majority of traders that trade maybe DXY, Euro, and GBP really did not take any trade for the past 2 days. Majority. So on that note, let's get to our main focus. And as you sit down, sit tight, and I'll be telling you guys where you should look out for tomorrow, Wednesday, 8th of October 2025. So today is a video for tomorrow, and today is Tuesday, 7th October 2025. So this is the dollar index, as you all know, and we've seen that today price delivered and closed, even closed above this particular our weekly draw on liquidity. Now, this is our main draw on liquidity, which is our highest expansion that we are expecting price to reach for on the weekly time frame. And now on Tuesday, price has already delivered to that level, which indicate that Wednesday might still continue, and Thursday and Friday might be bearish reversal Thursday, right? So we might eventually have reversal Thursday. Now, as we continue to go higher, this gap, right? I called it out yesterday that I want to see price feel it, and we did not feel it. And that is a signature in price telling us that this gap must be actually filled. And this is a signature telling us that despite the prices going higher, we're going to expect, or we are going to see a drastic move that is going to bring price back to this level. So we can continue to buy, but don't hold any long position within this range. Why this weekly opening gap still remain untapped? You can't hold any long position. But on a daily time frame, as a day trader like me, you can take in, come in and go out. So price today candle has opened and continue to rally higher, and even rally until the daily close, until the daily candle close. And we've seen that the candle actually closed above previous day high, and also closed above our liquidity, internal range liquidity and target. Now I told you guys what a target is for me. When this is a liquidity area, right? It's internal range liquidity for me, and it's a target for me. That is, I'm not expecting price to sweep it and reverse. So now we've seen it play out. Price did not sweep it, we just go above it, and we even close above. So our next optimus liquidity here now would be this particular high. So we'll be looking at this high tomorrow, going in on tomorrow. Now don't forget what this still stand for. This is a rejection block on a daily time frame, and also the fair inversion fair value gap. That price, if price get here, it might actually lead us back to this level, which is what I'm thinking. But price might not actually do that, since we have our monthly external range liquidity line above here. So this is what we have on a daily time frame. On the 4 hour, I'm just going to tell you where to look into. On a 4 hour perspective, I want to see price continue to go lower and eventually reach for this fair value gap. We have our turtle soup, that is, if price turtle soup it to go higher. But what is the key level we have there? We have our fair value gap, which is our key level, or right, that we expecting price to reach into. before going higher. So this is majorly what you should look out for on DXY, and we might actually see price continue to go higher, but it will not do much and rally lower. Anyways, if price did not give you any opportunity to sell, you understand that the price is not willing to go lower and it will just continue to go higher, since the price they are not even making any form of what long time retracement on price. So this is just it on the XY for hourly contract. So let's go to euro US dollar. So this is the euro US dollar. Let's start from the daily. Now, on the daily time frame, we've seen a new candle just open. Now, the previous day candle closed below previous day low, right? This is a close above, sorry, it's not a close below, but very close, and that means we are still bearish, right? And that's why price is still bearish, but we can actually anticipate for a retracement, right? So, my highest retracement is this candle, this blue line. This blue line indicates the 50% of this candle wick. This previous day, which is the Monday candle wick, this candle, the large wick that went below and went back and closed this week, the 50% is my area where I want to see, which is the consequent encroachment. I want to see price reach for the premium of this, because this 50% is the equilibrium and the lower is the discount. Price is in the discount of that week. So I want to see price reach for the premium of the week and use any lower time frame PDRA to deliver lower prices on to going in tomorrow. So the high of tomorrow should be above here and the low should seek all the way to this external internal range liquidity plus target. We have not reached this liquidity, and we also have this low remain untapped, which is this sell side liquidity that still remain untapped. Unlike for DXY, DXY has already tapped this external edge liquidity. Now, on the 4 hour, this is what I'm looking out for. Now, I mentioned this bearish order block yesterday. Now, but I myself wasn't sure that this bearish order block is going to be very effective to deliver price continuously. I was anticipating for price to at least sweep this high or range higher, right? But not above this high. Then before it continued to go lower, but the reverse was the case, and price opened today and continued to go lower without even giving any form of retracement. So we've seen that price has already delivered lower, and the consequent encroachment still remain this candle weak. So this is a 4 hour swing high. We have a swing high here, which we are anticipating for price to seek for the swing high before going lower, right? So, and also we have 4 hour inversion fair value gap. So if we swing the high, we can eventually see price reach for this inversion fair value gap before going lower, right? So this is what I'm anticipating for, and my highest expansion for tomorrow is this, right? Especially the whole of this week, right? Whether tomorrow or next, that's my highest expansion. So on an hourly time frame, right? On an hourly time frame, we've seen this our smaller uh, internal range liquidity plus target, the one I showed you on the daily. We've seen that price has not actually reached for it, and price is ranging around it. So on this hourly time frame, I want to see this inversion fair value gap. If price reach for this inversion fair value gap, a smaller fair value gap, inversion fair value gap here, if price reach for it, it should be enough to deliver price lower. Then during London, price will rally higher. Then New York will continue lower prices, right? That is what I want to see tomorrow. But whatever price is doing, I have already laid my condition, and I'm just going to see if price play out according to my condition, or whether price just want to continue going lower or want to reverse and go higher, because anything can happen, right? But I have a condition which I want to follow, and yes, that is what I want to stand with until going in tomorrow. So this is the main purpose uh of having daily bias All right, you need to just determine what the bias for you is gonna be for the next day. Now, on GBP, we've seen that, right, despite we have a rejection block. Now, what happened yesterday, right, hardly occur in the market. Like, being honest with you, it hardly occur in the market. And what we normally see is price. So that's the 50% of the candle wick consequent encroachment. So what we normally see when we have this kind of candle is higher prices. But now we've seen that kind of candle and we see lower prices. This is just to tell you that sometimes you are going to be wrong, right? You're just going to be wrong about what you actually think you know, because the condition of price might actually change. And again, this is what I was referring to as our price irregularities. Now we've seen what is the condition of government shutdown in the US, and how, look at how the detrimental effect it is having on price and how it is affecting traders. But, well, never we standing, I still stand for bearish continuation, since, and again, this bearish delivery is still in alignment with our a higher time frame, which is the monthly time frame. What the monthly institutional order flow. So, and now it is in alignment with the weekly institutional order flow. So everything is now in alignment. All we have to do is to look for a liquidity above to be swept, and market to use a key level above the liquidity to go lower. That is what you're just going to be looking out for going in forward. So now on GBP, I want to see price reach for this consequent encroachment. So we are going to go on a lower time frame to determine where price is more likely to reach on that consequent encroachment. Wow. So I forgot to remind you guys, do subscribe, like, and share this video, right? Subscribe, like, share, comment, and help me reach out more traders like you and I. So now I have moved the consequent equilibrium a little bit higher, which indicates that, right, we have a swing high. So this will now be our consequent encroachment plus what, turtle soup. We want to see price turtle soup this area and go lower. Then we have previous day low, and also what we have external low here. So, and this is what we still stand for on GBP, right? On GBP, I want to see price deliver all the way back up, but we can see price continue to rally lower during the London session. So during the Asian session, the London should be able to take us to this level, and the New York should continue or reverse and go lower, or Asian might go higher. But anyway, what I want to see is price get to this level. Then when price is above this level, I'll be a seller, and if price is below this level, I will definitely want to look for what a position, and I'm going to risk minimal because it will be against the institutional order flow. So this is it on the 4 hourly time frame, and I hope this episode is, mm, giving you the right things you need to go in tomorrow. And if you are enjoying it, do subscribe, comment, and share this video. Thank you, help me grow. Subscribe to my channel, share, help me grow. Thank you so much, and God bless you. So we have smaller time frame fair value gap here, which price also can reach out for before we see lower prices, right? Before we see price continue to go lower. So this fair value gap now is what I want to see price reach out for. Then I will anticipate for lower prices. So let's go to the Bitcoin market. So on the daily time frame, right? I called this out yesterday, but I was not so specific about today price. So despite I called it out, it did not go as I called out, but I did mention the fact that since the previous day, now what do we see here? Previous day closing below this candle high. What does that indicate? Weakness in price, right? There is a weakness. There is a weakness, and this price delivery higher is a liquidity sweep, right? But a strong liquidity sweep, right? And price will still continue to go higher. There is no sign of weakness, no sign of weakness around this level on Bitcoin. So there is and this price move is just a correction, right? We have continued to see price going higher, higher, higher. This is now the correction coming in. We see price delivered already lower, and what we have a close below candle today, which is a daily time frame market structure shift. So we are going to go to 4 hour to see if there is actually a change in the state of delivery. This is a market structure shift. It's different from what change in the state of delivery, right? So we are going to look for that. And the fair value gap I call out for you guys yesterday, we see that the fair value gap was traded below. So if the market really is going to continue to be bearish, we can actually see the fair value gap retested into and will be what we support lower prices on Bitcoin. On Bitcoin. So let's go to the 4 hourly time frame. Now on the 4 hour, we've seen a we've seen a change in the state of delivery. Complete, clean and clear change in the state of delivery. And again, I want you guys to look at something critically. This is double this is head and shoulder pattern. Just this is a head and shoulder pattern. It's been so wide, right? I've seen this in the market, but what do we have here is a very clean market structure shift, right? This is even a change in the state of delivery. So let me just save it as this, but you should go and save it if you want to if you want to add it to your chart. You should go and save it as market structure shift. And now, because we have this market structure shift, that doesn't mean that we are overly bearish, right? That means that this whole range that we already created, right? Just let's just adjust it. All right, let's adjust it. So that means this whole range that we have created, we can actually expect price to reach for the 50% of that range. So if we that is we let's take our Fibonacci tool and mark it out. So this is actually my last analysis. So now if we use Fibonacci tool, we have reached the price has already reached 25% on today price delivery, but we are retracing higher. So this retracement, we have a bearish order block here and the swing high here. So we can expect price to use this area. So I'm going to put something like this on Bitcoin, right? We can expect price to reach for that level and use that high to price lower, indicating that, sorry, right? So that's almost 1.44%, and you should not target be more than 50% of that range, because if we are coming to discount price, that means we are going to see price. This is even a long-term trade, right? A long-term trade. So this is what I'm anticipating for tomorrow on Bitcoin. I want to see market reject and come lower using this bearish order block, this 4 hourly time frame bearish order block. So go to your charts and analyze it critically and figure it out on your own terms. So this is very clean, has a clean entry and exit. We have one exit and we have our 50%, which is very instrumental to price. So I hope this video, right, actually put you well on track and helps you gauge what price is gonna do next tomorrow on Bitcoin, DXY, Euro, US dollar, and GBP. Right, I am a building coming up traders. I've been trading for. I even got my certificate for one of the Nigerian academy. I joined in 2022. So I started in 2021, but I become serious. I registered 2022, and yeah, I become very serious in 2023 and 2024, 2025. I was in school and all of that, but I'm graduate now, and I'm looking to make this very important to my life and focus on my trading career. Take it seriously than it you I normally takes it. So if you find this episode or you find this channel intriguing, please to assist me, help me share, like, comment, and God bless you so much. See you tomorrow on our next episode. God bless you.